Welcome to the Teaching Tax Flow podcast, where the goal is to empower and educate you to legally and ethically minimize taxes paid over your lifetime.
Hey everybody, welcome back to the Teaching Tax Flow podcast. Today, episode 96. That's right now 4 away. Well, technically 5, 6, whatever you want to do, however you count. You can do the countdown. You can do the math to 100. Again, we got a little special treat coming for you when we do click over to the triple digits on our podcast episode count. But today, we're not there yet, but we are going to talk about some hobby loss rules. So what exactly that is, if you're afraid of any rules at all, not the podcast for you, and you probably should go hide under a rock. But before we get into that, as always, let's take a brief moment and thank our episode sponsor.
This podcast is sponsored by The Mortgage Shop. Are you looking to qualify for an investment credit loan without jumping through hoops? That's easy. They have loans with LTV up to 89.99%. Exploring their products and discovering how they can work for you is simple. Just visit mortgage.shop or call 865-325-2566 and tell them TTF sent you.
All right, everybody, here you are, hobby loss rules here on the TTF Teaching Tax Flow podcast. Obviously, there you probably heard me talk about rules. If you don't like them, told you to kind of crawl under a rock, and I wasn't joking. Go get under a rock if you don't like rules, because here's another one for you. We have one rule here on the podcast, well, maybe two, but one I'm going to throw at you. Subscribe. Press the subscribe button wherever you're listening to this at, and while you're at it, don't be lazy. Give us a good review. There you go. There's another rule. Now, if you're really not here for rules, now you can get off. Just don't leave a bad review. Anyways, so hobby loss rules, right? What is that? What does it sound like? It kind of is exactly what it sounds like for the most part. But as always, my brother from another mother, you like how I enunciated that a little bit, the smarter, better looking, yet a little bit older, Chris McCuro. Welcome back to the show, buddy.
A little older. I'm a lot older, 10 years older, but
that's
I sound
not
10
that
years
much.
younger. I'm just kidding.
Gee, there you go. You don't act your age, and that is a compliment, sir.
Well, it used to be a slap in the face, but now it's a happy slap in the face. I appreciate that. Hobby loss rules. This is something that's a little scary to a lot of people, but we're going to simplify it for everybody. We're going to talk through what the difference between a hobby and business are in the mind of the IRS. We're going to talk about how you report hobby activity on your tax return, and some rule changes that occurred with the Tax Cuts and Jobs Act of 2017. Then we're going to finish with an example, practical example. The reason we picked this topic, a few different things. Number one, it's something that's been bantied about in the Defeating Taxes private Facebook group, which is the private Facebook group hosted by Teaching Tax Flow. We had a lot of questions about that, especially with the onset of the 1099K rules changing. We think there'll be a lot of additional reporting. And also, this topic was important enough to be a breakout session taught by a friend of mine at Taxposium. We mentioned attending that conference a few weeks ago in Orlando, Florida. Taxposium is the Super Bowl of tax conferences that's put on by the National Association of Tax Professionals. So because of that, we felt that this is important to address. So let's jump in, John, because I know you have a lot of hobbies.
Oh, yeah. Well, yeah, one of them is, obviously bothering the crap out of you with my dumb questions. So, and when we hear hobby loss rule, right? So I would almost bet, too, with this, that the term itself isn't very familiar with people or to people, but the concepts, actions, whatever, output, whatever we want to call that, probably is, right? So let's literally break it down as far as for hobby loss, right? So hobby business, right? Loss, I'm going to assume, right, that it's, hey, is there a loss through your quote unquote hobby business? Or am I completely wrong and is hobby in no way, shape, or form considered a business when we look at this?
That is correct. What happened previously is that there were taxpayers that were reporting an activity that had significant financial loss, that upon IRS examination was determined that it was a glorified hobby. So, John, we know that one of your hobbies
oh boy,
is that you're very involved. You're very involved in the canine industry, and you show dogs professionally.
Oh, of course, right? It's a special breed that, oh gosh, I can't even think of a little smart aleck response to this.
No, well,
Yes.
let's assume that you had a hobby, right? And that you really enjoyed doing.
I like the dog one,
And
though. That would be fun. That would be fun. I would enjoy, Basset Hounds. We'll show Basset Hounds.
Random tangent. One of the most underrated movies of all time. It's a timeless movie. It's called Best in Show. Best in Show. It's a comedy, and it has an all-star cast. It's an older movie. I'm not a big movie guy, but this one was fabulous. So it's gosh, I think it was in 2010. This movie came out, but anyway, it was fabulous. Just a lot of great actors, a lot of great actresses. So if you have a spare minute or you have a flight coming up, just download it. But let's assume, John, that you enjoy doing something as a hobby. And you liked knitting.
While I'm
and
showing
you would knit
dogs.
these beautiful Afghans that you would give out to everyone, and you would sell them occasionally. So you would make maybe $100 a year. But because you love knitting, you spent $3,000 a year on supplies and what have you. And you said, I sold $100 worth of my Afghans. I'm going to take a $2,900 loss on my tax return. Well, the IRS would say, John, this is not a business. This is a hobby. You cannot take a loss on your tax return from a hobby activity. You cannot offset your other income. So that's a pretty basic example, but let's dive into the main issue of when you look at an activity, is it a hobby or business? Some of the more popular activities that are deemed hobby would be, charter boat fishing, sports card collecting, trying to think of some, arts and crafts. I mean, there are some talented people that do it professionally, but some people just have a hobby. Pickleball. And what if I gave 5 lessons to someone for $20 a lesson and reported that I'm some type of professional pickleball instructor and tried to deduct all of my pickleball equipment and all of my travel to anywhere I go? No,
Hey, Chris,
pickleball is a hobby for me.
I guess this is a question for you too, like based out of your experience, right, in the private practice world for umpteen years. So some people probably look at it as, oh no, it's a business. I bill and I generated revenue. How can they tell me that it's not a business? Does the IRS almost, and I guess there's probably not an exact definition, of this, like a checklist. Maybe there is. But would it almost come down to a little bit of a debate, a little bit of an argument between them and the IRS if they ever really did look into it? And you would almost have to say, well, hey, look, I have a separate office. I have a warehouse for this. It's not a hobby. It's a business. I'm just a really crappy business person. Has that ever happened with one of your clients where, they're trying to show like, hey, we're in the early stages of this. We have a lot of losses, but, we're setting things up the way any business would be, and the IRS still coming in and saying no.
There's nothing wrong with having a loss from a business, but ultimately you are correct. There are tests that the IRS has to determine if an activity is a hobby or a business. So these factors, we're going to talk about those factors, but in general, here the IRS will look at an activity. So personally, in our private practice, I've yet to have a loss from an activity be deemed a hobby and the taxpayer lose.
Okay.
But it happens all the time. So the IRS is going to evaluate several factors to determine. The first thing is, regardless of loss or profit, is this activity actually a business? So what the IRS is going to look at is there a profit motive? Do you have the expertise to even conduct this business? Are you putting the time and effort into carrying on the activity that a business would require? Do you have an expectation that assets used in the activity are going to appreciate in value So, for instance, a lot of times people try to disguise a major purchase of an asset as a business asset when it's really a hobby asset. Has the taxpayer carried on similar activities successfully? Does the activity have a history of income or losses? What's the financial status of the taxpayer? Does the taxpayer rely on this income to live? If the taxpayer relies on the income to live, then you can make the argument that it's a business. But if the taxpayer has other substantial income and other sources of income, then it would be more likely that the activity would be a hobby. And is it of personal pleasure or recreation? Of course, I absolutely love what I'm doing, but as I just said, some of these more sexy or fun activities like charter boat fishing and pickleball, and for you, quilting and knitting, those not too many people. I'd love to know, John, actually, has a CPA ever lost deductions because of what they were doing was deemed a hobby? Not too many people go into tax planning, tax preparation, and it's deemed a hobby. But I actually kind of like it. So those are all the factors.
I mean, I could see it happening. Like another example of it might be, I know some guys that, they work on cars because they really, really like it. It's not their primary job. They might be in construction or anything like that. But
John, you actually have a good example now.
That's
a wonderful example.
Put that one in the coffer of John's knowledge bombs.
So here's an example, John. Let's say you have a buddy that works on vehicles. He does it on the side. He just has a passion for it. He fixes your vehicle. You give him $500. But he tinkers around with things. That $500, that's probably a hobby, right? Let's say he has a full-time job somewhere else. Let's say he's an engineer somewhere at General Motors. He just likes tinkering with vehicles. In that case, I would deem that to be a hobby. But where things get abused is him saying, "Well, I'm a mechanic, so I went and bought a Corvette kit, and I constructed it myself. So I'm going to deduct the entire Corvette because I was training on this vehicle. I was training on this kit." So that's where things get abused.
And I'm sure there's probably so much gray area in that, right? Like so much.
Well, that's why the IRS has identified 9 factors. Not one of them is quote unquote gospel, for lack of a better term, but it's a combination of these factors to determine is something a business or more a pleasure or a hobby. So like we mentioned with the tinkering of cars, typically the expertise of the taxpayer is important. In a hobby, there's usually little effort to acquire the necessary expertise or to consult as a professional. But in a business, typically there is. So that's where, there are just tons of factors. There's also one rule of thumb that I'm going to point out that many people are familiar with, in the term safe harbor. First of all, the term safe harbor means, in the tax world, kind of like being on go when you play Monopoly. You or maybe it's better because I love Monopoly. It's kind of like being in the jail, but just visiting. There's no benefit. It's just a safe harbor means, okay, I'm comfortable with this position and the IRS will accept it. So the IRS provides a safe harbor guideline, and that's known as the 3 out of 5 year rule. So in general, if an activity generates a profit at least 3 of the last 5 consecutive years, the IRS is going to presume that there is some type of profit motive. An activity needs a profit motive to be a business, not a hobby. Now, just because you have profit in 2 of the last 5 years doesn't mean that you are ultimately a hobby, no matter what. But it comes down to that safe harbor. So if you've got profit in 3 of the last 5 years, typically the IRS is not going to push back on you and determine is it a business first.
Makes sense.
So step 1, figure out if the activity we're talking about is a business or a hobby. Now, if the activity is deemed to be a business and you're the only owner, you got Johnny T's Quilting and Afghans.
Oh, guts.
My grandmother made Afghans. I'm telling you what, there was not a more comforting feeling growing up than having one of those. And she made them until her late years. She passed away quite a few years ago. But she, that's a great example. She would make them. She would sell them at the church art fair or craft fair and just donate the money, to the church. So that was a hobby for her. She didn't generate enough to put it on her tax return or anything. But anyway, let's assume you are a knitter and an avid Afghan enthusiast. Well, if that activity for you, John, is deemed to be a business, we would report that on Schedule C. That's self-employment income. We would report all of your revenue, and then we would deduct all of your expenses. Shameless plug for a previous podcast. Can't remember the number. Also, humble brag that we can't remember our podcast numbers on episodes.
We're getting up there in age.
Oh, we are. We're getting up there. But for something to be a deduction on your tax return for a business, the expense has to be ordinary and necessary. So you would ultimately, in that case, you'd file Schedule C, you'd report your income, and you deduct all of your ordinary and necessary expenses. And John, you'd pay tax on the net profit of the activity, and you'd be subject to self-employment tax. If you had a loss from the business, let's say that you had a modest $5,000 profit, this activity is a business, but you got fat and sassy and you bought a $10,000 sewing machine or some type of knitting machine, some type of equipment that's eligible for bonus depreciation, and that caused you to have a loss, you would be able to take that loss on your tax return because you are deemed to be a business. So that's if it's a business. Now, what if you're a hobby? Well, if you are a hobby, you have to report all of your income on your personal tax return. Sound the bummer alarm. That's reported on Schedule 1 of the 1040. That's on line 8, just as other income. There's no separate form for hobby. And you just report that as income. And unfortunately for you, John, all of that knitting, if you're deemed a hobby, is going to be fully taxable.
Oh man, even all the yarn, huh? It's a lot of yarn going to waste there.
It's a shame. Now,
but it happens.
Under the Tax Cuts and Jobs Act of 2017, the deductions for hobby expenses changed. So now hobby expenses are not deductible. Before, hobby expenses were deductible as an miscellaneous itemized deduction, subject to the 2% adjusted gross income threshold. But for 2018 to 2025, as it is now, you would not get a deduction for any of your hobby expenses. Previously, John, if you've made $500 knitting and you had $1,000 worth of expenses, you'd be able to deduct the $500 of expenses. Except you would only be able to deduct the amount that exceeds 2% of your income. So ultimately, most people weren't able to deduct those hobby expenses.
Right. And I'm sure a lot of the industries, too, just throw out some more examples of this. I'm sure a lot of the individuals that you might see at like farmers markets is probably fall into this. I know there's a friend of ours who makes soap, that's, I think a couple locations, candles, etc. So some of that stuff probably teeters a little bit, we'll call it more of a gray area, right? Because they are distributing it for sake. So that's probably more of a business. But, some of these other people, like if my daughter decided that she wanted to grow tomatoes and go sell them at the farmer's market, but she does it one day out of the year, but tries to, or dad tries to expense, hey, I need a new truck to move my tomatoes one Saturday out of the year, doesn't exactly fly.
You are correct. That's where I think that there's going to be more hobby activity reported. You always should report all your income, but with those 1099K changes that are eventually coming down the pipeline, you will see people that truly have a hobby. If they go to one or two farmers markets a year, John, let's say they enjoy going up to Mackinac, Michigan, and Mackinac Island or Mackinac, and they do two shows a year. They basically just want to pay for their trip up there and sell some home goods, or maybe they bake pies. That would be considered a hobby, and now they would have to report the income, and they would not get any deduction. So we're going to close on an example, though, practical example. We're going to bring back Johnny T, the show dog. the show dog walker and dog breeder.
Oh, now I'm a breeder.
So-
All right, let's do this. Okay.
Yeah, why not? We're going to, yeah, exactly.
So now I'm out there breeding these dogs, these fine specimens, and now we're out there strutting our stuff on the dance floor.
You're strutting like you've never strut before. You'd be considered a business if you maintained detailed records. You invested significant time. You consulted breeding experts. You had some profitable years. And you relied somewhat on that income for your living expenses and had a profit motive. It'd be considered a hobby if you just like prancing around with the dogs and you know, you don't put a lot of time into it. You rarely sell dogs because you just want to deduct them, and you really don't have good records. And you're not depending on that income to live on, and you really don't have a profit motive. It's truly a hobby. So that's just...
But yet the expense category of meals and entertainment is thousands of dollars, right?
Well, it could be if you have a business. It could be, but entertainment's not deductible.
If it's a hobby, right? If the IRS seen that, they'd be like, really? Like, okay.
Well, if it's a hobby, then there's no deduction available at all. You just pay tax on. But now here's the positive of the hobby is this. Yes, all your income is taxable, but it's not subject to self-employment tax. That's at 15.3% tax because you're not in a business. Self-employment tax is only charged when you're in a business. So to really kind of put a bow on this, no pun intended with the dog showing, there are 9 there are 9 factors. Not one of them is singularly decisive. You have to consider each factor. And if you are a business, you report Schedule C typically, pay tax, pay self-employment tax, but get to deduct all your expenses. Could take a loss on your tax return. A hobby, you're going to pay tax on your gross income, no deductions, but no self-employment tax. And I forgot to say this in the beginning. You know, I feel like we haven't said this in a while, Johnny T. We do really appreciate our listeners. I mean, we are coming up on the 100th episode. It's humbling. It truly is humbling to see how many tens of thousands of people have listened to this podcast. And if you're listening to this podcast, 1, we appreciate you. 2, take that next step and reach out to us. All of our best show ideas come from the listeners. Jump into our Defeating Taxes private Facebook group. Ask the questions. We're here to help. We don't do this for any type of financial reward. We really enjoy being part of the Teaching Tax Flow community, and
it keeps them out of the doghouse. If you don't listen to it, you're going to the doghouse.
We don't want to be in the doghouse. Get yourself out of the doghouse.
And you know what, Chris, too, kind of, more dad jokes. Well, it's not even really a dad joke, but it's just kind of funny that it's ironic, right? You have those 9 tests. Well, K9, there's another one. So this is a doggone it. This is a great show. So, anyways, well, back down to seriousness. Again, kind of echoing what Chris said there. Thank you, everybody, for always joining us here on the podcast. We are growing our numbers all the time on just the engagement we get from this. It's great being at these events and people saying, hey, you know what? I heard you guys did this show. It is kind of funny because I feel like some people actually know our shows and show numbers way better than we do, Chris. But that's we must put out some decent content every once in a while, and it must make sense to some people. So we appreciate it. Keep those ideas coming.
Yeah, John, you're the only one that's been identified as a celebrity from the show. So,
well, my witness protection program account manager must be, scared. So, anyways, back down to earth and reality. We will see everybody back here again on the Teaching Tax Flow podcast, roughly the same time next week, different topic.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.